and welcome to this FMB webinar, which is being recorded on the 19th of August 2021. My name's Hayley Lorimer, Director of Membership at the FMB, and if you're a new member joining this FMB webinar for the first time, you're very welcome. And welcome to everyone. Thanks for taking the time out to be here today. I hope you'll find it useful. We at the FMB are all very aware at the moment of the tumultuous times that FMB members are facing, with materials costs going up, with skills shortages, increasing work volumes, creating a kind of perfect storm that you're having to deal with. So as your trade body, we're here to do whatever we can to support you in dealing with all of this. And this webinar is one part of that support. There's also information and resources on the FMB website for you to use. And we'll send links out with the follow-up email after the webinar to take you to that if you haven't seen those already. And if we mention any other websites or resources as we go through today's session, we'll also put those in the follow-up email. So don't worry about missing any of that as we go through. We've got a panel of really well-informed speakers for you today who are going to be sharing information from different perspectives about the materials shortages issues, from the supplier side, from the legal side, and also from the member perspective. So I'm sure you'll go away from today with a good understanding of what's happening and why, and with some practical tips that you can use to help you to manage the issues that you're facing. Normally our webinars last for about 40 minutes. Today's may go on for a little bit longer than that, because we have got, as I say, some really useful speakers for you, and we've got a lot to get through, and we want to be able to answer your questions as well. So we may go on beyond the 40 minutes. You'll see that there's a Q&A box at the bottom of the screen there. If you have any questions as we go through the webinar, please post them in the Q&A box. We'll save them for the end of the session, and then the panel will answer your questions all together at the end, on the basis that there's no such thing as a daft question. And if you're thinking of a question for one of our speakers, then probably other people are as well. So please pop them in that box. And I think that's all the housekeeping that I have to go through. So I won't hold you up any longer. Let's get started. And our first speaker is Nick Oates, who's from the National Buying Group, who's going to bring his perspective on the material shortages issue. So I'll hand over to you now, Nick, if I may.
All right. Well, good afternoon, everyone. My name is Nick Oates. I'm Managing Director of NBG, National Buying Group. Now, it's interesting. Back in May 2020, we issued our first allocation worksheet to our members for British Gypsum Plaster. And it feels like an awfully long time ago. At the time, we had weeks of high emotion, frustration, and challenges, and it took a while to get the system agreed and an allocation system in place. But when we did, looking back now, I think it was an extremely good allocation. It worked very well. The volumes we had were reasonable, and we worked with British Gypsum to ensure they were fairly distributed and communicated. Now, if all suppliers were this well organised, it would be fine, but unfortunately, they're not. We believe at NBG that sort of by working together, we can work our way through these really exceptional, challenging times. So what I'm going to talk to you about today is hopefully give you some understanding of the challenge that the merchants are facing, and to help you navigate, a few tips to help you navigate the current supply issues. So to kick off, I'm just going to share my screen. So who are NBG? Well, we're a partnership of local independent merchants based throughout the whole of the UK. We're an LLP, and we were formed in 2003. We have 86 companies within the group, and they're all independent family businesses, probably typically 4 branches. So in total, we have 415 branches within the network. And a number of them are specialists, some of the mixed merchants, heavy side, etc. But what that gives us is a very strong regional coverage. So we understand regional products, we understand the challenges that exist across the industry pretty well. And we all work together for one objective, and that is to make sure that we have strong supply agreements in place. And those are negotiated by 8 category teams. So each of those category teams are segmented by geography, by turnover and expertise. And if one of those teams is important to you, then you'll be on that team and you'll make sure those agreements are right for your business. So you can see the 8 categories we have. I'm not going to read them out. But overall, we have some 330 agreements in place. And we want to get a mix of brands, value and choice across all of those products, because one of the primary things that we do at MBG is we want to be a very strong brand supporter. So it's important that we make sure that we have primary brands within our solution for our members, or we actually call them partners, because we're a partnership and every member has one vote. It's one member, one vote. So that's MBG. Now, I'll stop sharing because I did promise you I wouldn't kill you with PowerPoint. What I'm going to talk about very briefly is some of the challenges that are out there before I get to the key tips. So there are significant challenges. We have really exceptional demand. We have lots of shortages, and that leads to higher prices. In fact, every single commodity that we track and we measure, and we do it monthly, in some cases weekly or daily, every single one has gone up. We're starting to see a little bit of a softening of a couple of them, but not many. And when we go out and visit manufacturers, we see that COVID restrictions are still affecting their production capacity, but not just their production capacity, their customer service, their field support, and pretty well everything is going sort of slower than traditionally it went. And many of those manufacturers are still recovering because they've had no time to build stock. They've got lower service levels generally. And more recently, driver shortages have become an absolute nightmare. On top of that, we see there's the oil price increasing, and that affects obviously energy and fuel. A big problem across the piece with shortage of cement and timber. And again, I'm sure you're well aware of the shortages and the consequence on timber. Of course, that also impacts things like pallets as well. And containers, we've been tracking we always track container prices from the Far East and from India, and they've gone up. And for a while, we thought maybe they'd stabilize, but again, they seem to have gone up again. Volume restrictions continue in all of those areas. Now, it's not all bad, and that sort of summary makes it sound pretty severe, because overall, our purchases are nearly 50% up year on year, and they're up on 2020 and 2019, because actually, last year we did pretty well the same, despite all the closures, as we've done the year before. So it's a good story in terms of we're shifting a huge amount of volume, but there are major challenges out there, and lots of projects we know are having challenges of being fulfilled. And a lot of my partners don't like that because they're used to providing good service and they really feel they're letting their customers down. But unfortunately, it's not easy. We're also seeing some crazy price increases. And of course, some of those, we challenge, but some of them are simply take it or leave it. In a few areas, we're starting to see some easing. In the last few weeks, we have seen a slowdown. It's not massive, but it is because we're still well up on last year, but it's more than we would get for the normal summer holiday season. Now, we think that's a combination of lack of product, high prices on labour and materials, and also some people cancelling jobs, and we are seeing a bit of that. So what will happen for the rest of the year? Well, it's really hard to tell, but we think fundamentally there's still very, very strong demand out there. So there's likely to be a little bit of price softening on maybe products like timber, but really not much, but much more likely continuing price increases across the piece. I thought I'd give you a couple of very brief summaries, some of the major areas, very briefly. To be honest, we could go on for a long time on this, but we look at by my categories, brick and block. That's traditionally been well managed by the suppliers in terms of allocations. They're used to doing it on aircrete and bricks, and they do a good job in terms of making sure we have some level of supply. So the problems there really exist around price increase. And you're going to see prices going up shortly and at year end. Some of those will be quite significant. In terms of civils and landscaping, demand continues to be really high. There's ongoing logistical issues with drivers, and it's extremely challenging with natural stone on containers because they simply can't get the product onto the ships. So you can expect more price increases, and we've got a number of suppliers that have moved to price on application, so they simply will not give us a price until it is put on the boat. Concrete-based landscaping products, they tend to be on longer lead times. Availability is probably a bit better, but again, we're expecting price increases, or we've already had them. In terms of the decorating hardware in the kitchen sector, well, paint continues to be on variable supply. We expect to see interim price increases due to the plastic on tubs going up, and kitchen appliances are a major challenge due to the shortage of the controls. Screw and fixings, again, will be going up in Q4. Heavy side products, which is sort of probably one of the biggest sectors for us, cement, cementitious products, they're on allocation and they're going to stay that way for quite a while. All the brands are maxed out. There are relatively few imports, and there's longer term supply issues with volume. So prices are likely to increase, and this carbon tax that the government have introduced is just adding to the costs. We're seeing that affecting other concrete-based products like lintels and fencing with long lead times and allocation. Plasterboard is on allocation, and again, you'll see increases coming through between August and October. Steel-based products, lintels, wall ties, bead and mesh, they're all up, although probably peat and shortages are easing. Garage doors, we've seen some really hefty increases there, as we have with chemicals, where silicon's gone up. Funny enough, plaster, the one we started with, is actually okay. On the plumbing side, plastics, big problems there because there's been huge US demand, and they've had problems with factories that have shut due to flooding. Oil is up, so there's been probably one of the most common current issues we have at the moment. There are shortages there, and bathroom-based products have a variable supply. If we look at roofing, roof tiles, ongoing challenges in that area, which actually started probably before COVID, very long lead times in some cases. With PIR, it's been on allocation, and there's big increases on MDI coming literally monthly to us. That's the raw material that drives the product. Glass insulation on allocation, some increases. And roof windows, there are shortages of products and lead times are moving out. Timber, nearly there. Carcassing prices very high. We have summer mill shuts, which, whilst we may see a little bit of softening on price due to some of the volumes, again, we think that's probably just a pause. And OSB MDF, you see manufacturers switching volumes out of kitchens, into kitchens. And so we're continuing to get monthly price increases and ongoing supply issues. So timber is not an easy area. And tools and workwear, the final one, power tools has been challenging. There are plenty of alternatives available. Cement mixers, extended lead times, the PPE, where there have been shortages, now pretty good. So that gives you very, very quickly an overview that there's a lot of problems out there. Now, what can you do about it? And hopefully I can give you, by sharing this slide, some tips. So tip number one, I think it's really important that you plan and you order early. So last minute ordering, will have problems with products unavailable, and products will be subject to price changes. Therefore, get your materials in as early as possible. Number two, take early delivery, or if possible, ask your merchant to reserve and store the stock. We do anticipate that, not every merchant has got space available, but I'm sure they'll help you where they can. If the product is not available ex stock, make sure to order the products early with the requested delivery date and allow for plenty of time for changes. Because a lot of manufacturers, even when they think they can send you the stuff, the reality is drivers are not turning up, or they're being poached and they're not getting stuff as planned. I guess this is a request from some of my members. Please don't multi-order from merchants. it's hard enough trying to deal with the level of disruption and the variations in demand. So please place the order on the merchant only once. Number 5, check if products are on allocation from manufacturer. Ask your merchant. They're there to help you. And if you have a large order, that may not be covered by the merchant's allocation. Now, that isn't always a disaster because sometimes manufacturers have special allocations for particular projects. And so by talking to the merchant, they can talk to the manufacturer and hopefully they can then reserve stock for the larger projects. If it is a longer lead time project, then I know you're going to cover this later, but I think it's sensible to put in some price adjustment mechanism. And that should be probably based on the manufacturer's published price. It's going to be difficult, but I think it's important that you have that conversation early on with your customer and not leave it to the later stages to avoid any unnecessary disputes. Number 7, collect where possible. There is a major problem with drivers across the UK, particularly in some of the regions. It gets worse the more extended you get from the centre. So where you can collect, and to be honest, a number of my partners are going out to manufacturers and having to collect from quite long distances. Collect where you can, it just helps the whole flow of product. Number 8, request your merchant for alternative products. So in some cases where products are out of stock, what you'll find is that manufacturers have really focused their production down to the core ranges or the core products. They can't switch, they haven't had time to build stock across the whole of the range. So needs must, they tend to focus on the key lines. So try and influence your customer to pick the key lines and not to request really unusual or slow-moving products. Number 9, don't forget all the consumables, because there's as many problems on diamond blades, buckets and power tools as there are in other areas. So make sure, again, you get those in early and you're not lacking when it comes to the key time. And finally, number 10, please talk to your merchant, because these things are changing incredibly quickly. And the merchant and their teams should have solutions for you to try and help you fulfill your orders. Funny enough, I was just talking to supplier just before the call now, and they're struggling to get product onto containers. They're now air freighting the product. Now, clearly, there's a price implication of that. They believe that's a good investment in service to their customers. So we talk to suppliers. Please, we'd request that you talk to your merchant. And finally, please stay calm. We're all in this together. It's really tough. Now, merchants are, they're taking multiple orders to fill orders. They need to do multiple calls to suppliers. So that's pretty challenging. And prices are often changing very frequently and sometimes without notice. And deliveries are slow to arrive. And that's not always the supplier's fault. I was with a supplier recently, and 60% of their deliveries are from fleets, but the other 40% they rely on contractors. And they're getting let down very, very regularly. The staff are getting pinged and drivers are getting poached. Lots of merchants are extremely stretched, and they've been working for a year and a half pretty well without break and pretty well at the maximum. So please, let's work together and we'll work the way through this particular headache. Thank you very much.
Excellent. Thank you, Nick. There's some really useful information in there. It almost seems like this entire industry of the construction product supply chain has chugged away in the background for decades, with us all taking it for granted and assuming that everything would flow through. And now it's been hit by this really complex set of circumstances, hasn't it? So, yeah, that's really useful. I can see that people have started to post. We've got one question in the chat box. So if anybody else has any other questions for any of our speakers as we go through, please post them in there. I'm just going to quickly ask a question of our audience before we move to the next speaker. So I'll put the poll on the screen now, which is just to ask you which of these issues are affecting you the most, which will be useful feedback for us. And thanks again, Nick, to you. So you should be able to see the questions on the screen coming up now. And it's asking about whether you're struggling to get materials from your usual suppliers, whether the costs have increased, Are there being delays in supply of those materials? And I guess the answer to all of those is going to be yes. Have you also got difficulties getting skilled workers, paying increased wages? And are there client disputes occurring due to these delays and increased costs? And I think we can see there 100% of people attending in the audience is talking about increased costs of supplies. And as Nick's outlined already, there are a complex set of reasons for that. So thank you very much for that feedback, everybody. I will close that off the screen now because I think nearly everybody has answered. Yeah. And it's about costs and delays and just being unable to get some of those supplies, as you've said there. So thanks again, Nick. I'm now going to ask Matt and Chris from Marshalls to give us their presentation before we move on to Sarah with the legal perspective on this.
Thanks, Hayley. So afternoon, everybody. My name's Matt. I'm the planning director for Marshalls PLC. So I'll take you through a few slides in a moment, and I suppose what I'll do is try and give you the manufacturer's perspective. So I'll talk you through really, I suppose, what happened. So the words perfect storm were mentioned earlier on. I'll touch on that in a moment. I'll touch on what basically has happened in the world of Marshalls and what we're doing to improve our stock situation, which has been exceptionally challenging. And then I'll hand over to Chris, and he'll talk about how we can help FMB members. So perfect storm. This chart here really is just showing you order level, and you can see this across the last sort of 2.5 years really. So the red line is actual, the dotted line is our forecast. And basically around this time here, we had Boris's initial lockdown speech on the 23rd of March. And at that point, we were actually starting the year fairly steady. But around about here, 23rd of March, activity just dropped off a cliff, as you would expect. Now at that point, a few things happened. So we kept trading. So we kept our logistics function operating. We weren't really sure what our customers were going to be doing. So we kept a skeleton crew there, but actually we paused manufacturing. And we did that for a few reasons. One was we weren't sure what market activity was going to be, but also we needed to understand, could we operate COVID safe? And there was a huge amount of work went in by our health and safety team and our manufacturing teams to get to a point where actually we could operate safely. We were also then looking at what the next few months might hold, and trying to predict the unpredictable, I guess, was quite challenging. But we assumed, if you look at this dotted line here, that we'd see a fairly steady recovery. And that activity level would probably level off around about August, and it would probably settle at about 10% lower than we were in 2019 in the same period. And off the back of those assumptions, we actually adjusted our manufacturing capacity downwards. And I know that we weren't alone in doing that. I know other manufacturers did very similar things. So what then happened? Well, in May and June, we had phenomenal weather. We got a significant proportion of the population on furlough, unable to go anywhere. So actually what everybody did was DIY. They improved gardens, houses, etc. So we saw this domestic boom and a very, very strong housing sector. And you can see that really with an almost vertical line here. So way ahead of our forecast. And it's quite difficult to see from this chart, probably because I've taken the numbers off for obvious reasons, but just to put it in perspective, we expected the year to sort of close out at 10% less than 2019 at best in terms of order levels, but actually the second half of the year was 11% up. So, 20% delta from where we expected it to be. The stock that we built through the end of 2019 and the start of 2020, as per our plan, that was very rapidly consumed. And our operating model actually then moved from being an ex-stock business to essentially being a made-to-order and lead time-based business. So not where we wanted to be, not where we want to be, and quite a challenging set of circumstances. And levels of demand have continued to exceed forecasts since then. And if I roll forward into 2021, you can see here the dotted line, we were expecting continued growth. But actually, if you look at the actuals, the red line here, again, another vertical line when you get to sort of the March time of the year. And to put that in perspective, we measure versus 2019 because that was the last normal year in inverted commas. The first half of this year, order levels have been 26% higher than 2019. So challenging to say the least. So what have we been doing? Well, we've been investing heavily in capacity. So I'm not going to go through all of this in detail, but it's a bit of a roadmap just showing you where we've added capacity into our manufacturing network. So Flag Urban Edging at the top, CBP, so concrete block paving at the bottom. And you can see in a number of areas we've invested in new equipment. We've started up assets that we've got mothballed at the time. We've added shift into the situation. So we've invested heavily there. And we've actually got one of our sites at the moment undergoing a further upgrade. So Carluke up in Scotland, we've got an upgrade going on there, and that'll increase the speed that plant can run at. We've also got a roadmap in place for further investment in Flag Urban Edging and CBP capacity over the next few years. So we'll be continuing to build on that. And we've got further investment coming online in 2022. Over and above that, though, we've also had to invest in people and systems. So particularly in our customer service area, we brought additional staff in to support increased phone demand in particular. So we were seeing an increase in call volume, and actually the duration of those phone calls was a lot longer. So a lot more queries about stock, a lot more queries about delivery, a lot of people sort of unsure about how they were operating in the world of COVID. So yeah, we brought additional people in. And we've also had to do some work on our systems. You know, typically we're an ex-stock business, but our systems are geared around being an ex-stock business. So, you know, we've had to develop our processes and our IT to be able to operate like a lead time business. So we launched something called Stock ATP, and that basically means now at the point of quote or order, we can give you an estimated earliest availability date for those products. And again, you know, we are still operating to lead times. And those times are still very challenging. So as I said, we've invested heavily to add capacity into our network. We've still got more to come. As I mentioned, we've got a roadmap in place for future capacity growth. And the situation is improving. Demand is still very strong, though, and product is still on lead times. If you look at our lead times are now starting to reduce, but we're still some way from being an ex-stock business. And just to both reiterate, you know, the first half of this year, order levels were 26% up versus 2019, our last normal year. Drivers, Nick mentioned drivers. You know, we have our own transport fleet at Marshalls, but we also do use third-party logistics. And the transport market is exceptionally tight. So there's a massive driver shortage, as Nick mentioned, but also a lot of logistics companies, with the uncertainty last year, they didn't invest in their fleets. They didn't extend their fleets or extend leases, etc. So the market is extremely tight, and third-party engagement and price is incredibly challenging. So actually, one of the things that contributes to our lead times at times at the moment is the availability of transport. And then raw materials. So raw materials, as Nick mentioned, you know, are in very, very high demand. So timber, steel, brick, roof tiles, amongst others, are in short supply. But in our industry, or in our business, we get exactly the same challenges with the materials that we use in the manufacture of our products. And Indian sandstone is particularly challenging. Container costs have increased pretty much sevenfold. So our procurement team are probably some of the busiest people in the business at the moment. You know, they're dealing with availability and price pressure on a daily basis. Chris, I'll hand over to you to pick up.
Thank you, Matt. So I'm Chris Churm. I'm the commercial director, mainly working on the domestic side of the business, which, as Matt says, has been incredibly busy over the past 17 or so months. This is just a very simple slide to try to explain the impact on shipping costs in relation to Indian sandstone. So the situation isn't that we can't necessarily get hold of stone. We've bought more stone and traded more stone than we've ever bought before. It's not that we don't have stock on the ground. We have got stock on the ground, but it's spoken for, as it were. So as Matt just alluded to on the previous slide, the shipping rates, and then these are publicly available numbers. The shipping rates, as you can see there on the far right column, Mundra, the port in India that we use, typically a 20-foot container has increased in price from just over $1,000 around about a year ago to the current price of $7,000, which, when you're talking about, you know, fairly bulky, relatively low cost material in a container, that's a very high proportion of the overall price of the material. And then we, like others, import certain materials, granites, for example, slate from the Far East, from China, and the scale of increase with shipping there is even greater. So it's not necessarily that the manufacturers in these countries are putting the price up. In fact, you know, quite the reverse. Some of the FOB prices have actually come down, and perversely, the manufacturers are actually trying to supplement the overall landed cost of the product to keep their products of interest Indian sandstone, as you probably now know, is not far off porcelain, with all the advantages of porcelain. So the increases in cost are purely down to shipping. So just very quickly, the next couple of slides, a very basic introduction to Marshalls for those people on the call who might not be fully acquainted with everything that we do and how we can support. So I think historically Marshalls have been associated with landscaping materials, so commercial landscaping materials, domestic landscaping materials for driveways and patios. Over the past few years, we've grown organically and also through acquisition. So we now have a brick business. We have an emerging division of civils, drainage and street furniture, which goes from strength to strength. So if historically you've thought of Marshalls as being for paving and block paving, then we've got a much wider range of materials. So you can see kind of the Marshall house there, and how we try to represent that broad brush of the portfolio that we can support you guys with. So I think some of the points that Nick touched on, his kind of top tips. It was all around communication. I think that's probably the key for us. So we work obviously very closely with merchants, but we've got a very clear handle on the stock that we've got within our network. We operate regionally, so we'll have different stock levels, different product levels in different parts of the country. So if you are struggling to locate a certain material and you've been talking to your merchant, then please do talk to us. We can advise on current stock availability across the group. We can advise on alternatives. We can advise on production runs. Occasionally it might be that stock is earmarked for a certain customer, but they don't require it until after the next production run. So we can be a little bit flexible and creative and move things around. As Matt touched upon, there are logistical challenges, but again, we've started to reinvest in our own fleet. So we are now up to, I think, 234 of our own vehicles across crane vehicles and flatbeds and Moffats. So again, through communication, we can try and work with you guys to price materials and then find the most suitable way, depending on site conditions, to make the delivery. In addition to the manufacturing and the supply, we do have a whole host of supporting services across our divisions. So I know that we've done some work with some of the members on the call in relation to design. We've got very strong design functions. So it's not a sales call, but I know that my boss would be disappointed if I didn't talk about some of the positive things that we can do to support you guys in addition to supply materials. So just to round up, as I say, it's as a business, I know that we can be quite complex and it's not always easy to know to talk to. So for domestic inquiries or domestic materials, you can use the contact number and email there. If I can help at all, please jot down my number, and if it's a query for another part of the business and you're not quite sure who to contact, then please give me a call or send me an email and I'll do my best to help.
Okay, thanks, Chris and Nat. Really useful information there as well for members, and we can post those contact details in the follow-up email as well in case anybody does want to get in touch with you. So we've now had quite a sort of comprehensive coverage of what's happening out there and why it's happening. And we're now going to turn to Sarah Fox, who's going to talk a little bit about what members can do to manage the consequences of all of this with their clients. And if you're not familiar with Sarah already, Sarah's the 500-word lawyer, because she believes that contracts can be written in 500 words, as it says behind her. And she has worked with the FNB over a long period of time now to help to update our suite of contracts. And there's a whole series of webinars on the website about working with the FNB contracts and getting the best out of them that Sarah has presented. So I will hand over to Sarah now to talk about how to deal with the contractual fallout from all of the issues that we've been hearing about. Over to you, Sarah.
Thanks, Hayley. So we're in a situation that is not of any of our choosing, it seems to me. And if you're already in a contract, then whether or not you can pass on the time delays and the extra costs of your materials will very much depend on what's written in that contract. Over the years, JCT contracts, NEC contracts have talked about fluctuation indexation provisions, but because we've had a very stable market for supply, we've got used to the fact that we can pretty much tender and quote for a price and it will roughly stay the same in the next 12-month period. That's not happening at the moment. So a lot of the provisions that we could have had for contracts that could have been useful to members don't exist at the moment. Some of the contracts have got some clauses which might be able to help. So JCT looks at being able to get extra time and loss and expense for this sort of unexpected event. You might be able to look at acts of prevention under NEC. And then under the FMB suite, we've got rights to more time for delays which are not your fault. And then for costs relating to delay and disruption. But also we've got unforeseen problems in the short form. We've said that time is not guaranteed in the short form, as you'd expect, and that there's unexpected work under both the commercial and domestic larger contracts. But the reality is that in order to deal with the situation in a contract, whether you're in it or not, we need good communication and good planning. And lots of people have already talked about communicating with your supplier, your merchant, your client, working out whether or not you can do a redesign to meet the client's objectives while still providing what they want, but doing it in a way that uses, say, core products which have got better availability or that are available quicker due to lead times. So unfortunately, this is a massive amount of admin that you need to do in order to have the right conversations with your clients. If you're not yet in a contract and you've got tenders out there, proposals for projects that you're about to start, you need to be very clear that those tenders and proposals have got a short time span for both the projected time and projected cost, because the volatility of prices is outside your control. The Ocadis data shows that about 66% of the costs of your project are related to material outside external forces. So because you can't control those, you need to make sure that that 2/3 doesn't eat up all your profits. So you need to plan in advance. You need to limit the availability and the price details in your tenders, your quotes, and your contracts. You may also want to look at the FMB website, which has the wording that we're suggesting to put into contracts to allow you to recoup additional materials costs. You can adapt it so it reflects supplier prices, or whether it gives you a little bit of flexibility to pass on some or all of that, depending on how you can adjust the whole project. Talking to your merchant before you talk to your client would be sensible, so you can actually give the client a bit of certainty, because what they're really looking for from you is certainty of process, certainty of outcome, and certainty of price. So go well versed in what you can actually do for your client. The other thing you need to be aware of in the whole scheme of things is to look at the financials of the people you're working with, because insolvency is a big risk in the construction sector at the moment, because we're on low margins, high price increases, a lot of instability. We've had a lot of uncertainty. So just be super alert to insolvency issues with your whole supply network, and avoid quoting what clients want, which is a fixed price or a lump sum, because they've got to get finance for whatever project. Most of them don't have the cash sitting around in their bank account. I know there's been a lot of increase in savings. Some projects are going to come out of money that they've saved from not going anywhere for 18 months, but they still need to approach a bank, get a loan for the work. So you're going to need to build in contingencies and to be really open and upfront about those contingencies. We know that prices have always increased in the construction sector, but now we need to put in a much bigger contingency so clients have more certainty and can get the funding they need. The other thing you should be doing is keeping really good records. I know that most people don't go into construction for the paperwork, but if you've quoted a price based on particular materials costs, you need to be able to show that those costs have increased. If you're going to start to recover time and money, you need to show that we're moving from an ex-stock situation to lead time situation, so that you can show that it's going to take more time. So think very carefully about what information you've got. how you keep it, because if you do end up in dispute, those records are going to be really critical for you to be able to recover as much as you possibly can. But remember, what you're trying to do is achieve a specific objective to the client. And actually, if we can bear that in mind, sometimes there are different ways of being able to produce the same objective for the client using a slightly different selection of materials, design, as marshals have mentioned, of things that are in a better stock, that's things that are in a core product like Nick mentioned, doing some of the transport and logistics yourself. So there are lots of different ways to get to the client's end result, which is going to need a lot of change and a lot of fiddling and a lot of process. So kind of think about how you can do that to achieve the client's objective, and think, well, your contract at the moment is, well, it's not quite as firm and fixed as it used to be. And really, keep in contact with the FMB. Make sure that you've read the up-to-date advice that is on the website. Make sure you've gone to the webinar so you knew how to run your contract in the first place, or look at them online. And just keep chatting and asking for advice, because we can only help you with these sort of contractual issues, supply issues, and everything else if you keep talking to us. So I didn't have any slides, but that's all I wanted to say on the topic. I know there might be questions and we can deal with those at the end.
Brilliant. Thanks, Sarah. There's repeated themes coming through from everybody's presentations, isn't there, about communicating early, keeping in touch, keeping up to date with developments. And yes, that's good advice to keep looking at the FMB website, because I know those pages are being regularly updated with advice for members. So I'm now going to hand over, thank you, Sarah, to our last but not least speaker, which is Gary Olson, who's a member of the FMB with his company Create For You, based in London, and is also a member of the London board and of our standards committee. So Gary gives up a lot of his time and expertise to support the FMB and our members. And so without further ado, I'll hand over to you now, Gary. Thank you.
Thanks, Hayley. Hello, everyone. Yes, there will be recurring themes in what I've got to say as well, but I'm sort of saying it from a perspective as a member and as a contractor. So I'm kind of in the thick of it, really, like we all are. There's no doubt about it. The material shortage inflation we've had over the last year, on top of COVID, it's really been a cherry on the ice on the cake. We've had quite a few challenging contracts where we've had to seek extensions of time. We've had disagreements about additional costs associated with that, and it is really hard. And it also seems it doesn't appear to be any sort of obvious let up in the foreseeable future about material price increases and fluctuations. So I suppose the theme of what I'm going to be talking about is how you can try and insulate yourself, protect yourself as much as possible to try and help ride out this stuff. And as mentioned by Sarah, there's FMB have got lots of stuff online, and we use a lot of it ourselves. Based on our company's own experience with price increases, we use one of the nationwide builders merchants, and we felt we had fairly steady rates. We put them up a little bit, but with very little notice and probably out of their control, the rates went out the window, and we're midway through contracts having to sort of pay a lot more. This is obviously a serious problem if you're in a JCT contract, in minor works or intermediate, because, as Sarah said, it's difficult to get additional funds or costs for it. Again, we've got personal experience at the moment where, we're getting hell of a pushback from the contract administrator when we're doing our final account. And that's in a JCT intermediate. Our preference is to use FMB contracts, but if you are dealing with a contract administrator, an architect or surveyor, then that's something you have to deal with. Again, picking up Sarah's points, JCT contracts puts all the risks with a contractor. There's no doubt about it. Again, we've got to try and find a way to insulate ourselves. So I think when you're tendering, I think it'd be really good to be commercial in your sort of view about your tender. So if you put items in your tender and say, yes, I will tender for this project, but I'll only enter into a contract if certain circumstances or certain things take consideration, like a materials fluctuation clause, and may be prepared to not get the job if the contract administrator or the client won't accept that. But I personally think you're better off not doing a project than doing it and you're going to lose money. I'm pretty certain most of the people on this call, members, have probably lost money on jobs in the past, and it's not funny. Going to work for nothing isn't a nice place to be. So we're inserting these clauses ourselves. We're signing a contract on Monday with a client. We send out our clients the contracts that we're proposing to use, F&B contracts, in advance and say, this is what we want to use. We're also now starting to send out this materials fluctuations clause and say, we will be adding this to the contract. And the client signed on Monday has written back to say she understands and she accepts it. So that's a positive thing from us. So hopefully people will be, amenable to it. The other thing that we sometimes do, or very often do, if there's a particular part of the contract, particular element that we think there might be a real risk on price inflation or something, is we have that element itemised as a provisional sum. And I know provisional sums are something that contract administrators don't really like, but again, we shouldn't always be taking all the risk, particularly in these times. So we also use PC sums for certain items. So let's just say it's Indian sandstone. We might turn and say, well, look, we've got a PC sum, a purchase cost sum of X based on this number, this quote. You can even show the client the quote that you got from your merchant to say, we'll provide X number of square metres of paving, and this is the cost. The cost to lay it probably won't go up. So you can probably fix that element of it. So that's a way of making clients hopefully feel a little bit more comfortable with you inserting those clauses and then contracting to it. As Sarah said, it's all about communication. We find, communicating with clients early. Very often contractors make the mistake of waiting to the very end to then tell the client there's going to be additional costs. And I'm sure Hayley will agree, there's a lot of disputes coming to the dispute resolution team of the FNB when clients feel like they've been ambushed with additional costs. So we think, if you've got to tell a client bad news, might not be a comfortable conversation, but it's best just to get it out of the way, really, and deal with it. Again, with the communication, we have a process that if we have a meeting with a client, we always follow up with an email. So I hope I'm not teaching you to suck eggs, but I think a lot of people don't do that because they feel they're too busy. But we find that the half an hour of writing to them and just a few bullet points, we discussed the following, we agreed the following, we told you about this. In months to come, if there's a dispute or a disagreement about something, you can refer back to the email trail and say, well, I did advise you of that. And that's far more likely to dampen down a dispute, or if it does go to, like the FNB as a complaint, as the contractor, you can say, well, we did tell them that was going to happen. And also, if there's a scenario of kind of a redesign, sometimes it has to happen partway through the project. So, again, one of Sarah's points, if you're dealing with it early and you're on top of your paperwork and you're on top of your communication, it's definitely going to be less of a pain in the thing you sit on than it might be later on. So, I suppose it's all about being transparent and open. And, this written note is so important. We use WhatsApp with the clients. Probably a lot of people do. It's really useful. Again, you've got to know. You can trawl back through the WhatsApp chain and go, yeah, we did discuss that because we told you about it and we sent you a photograph of an invoice or something like that. So again, I think that's really useful to kind of head trouble off at the pass. Yeah, picking up Nick's point, Matt and Chris as well, it's talk to your suppliers. I think that's probably really important. It's that advanced sort of stuff that you can do. One of the things that we do is we've started to say to clients that we'll buy materials in advance. So we might have to sort of borrow a bit of their garden or something like that. But we're looking to start to get things like PIR, bulk stuff that you can store that as long as you protect it from the weather, it's not going to go off. Timber, maybe a bit careful on cement and definitely not plaster or plasterboard, but they don't seem to be the problem at the moment. And one of the things we've said to people is that if it's a big chunky item, we might say to them we need an additional payment for that item. And we say to them, it's on your property, you paid for it, you own it. And we give them a little bit of documentation that supports that. And then you can sort of factor that in with your final account. Another thing that you could probably consider doing really is engage with other members. So with the London board, since I've been on it, I've got to kind of meet a load of other people in London, do similar stuff to us. And really helpful and supportive to be able to just kind of put a message on the group and say, look, I'm struggling to get this. And very often people will do that. Now, I know there's work going on behind the scenes or discussions at the moment in the FMB to potentially try to engage that member-to-member sort of conversations. There is a Facebook group. I personally don't do Facebook, but, I know there's a Facebook group where you may be able to kind of put questions on that. I'm a contractor in whatever, and I'm struggling to get that. So a guy called Chris Carr, he's a national board member, and he's on the FMB Facebook group quite a lot. He said today that he's got a bit of a cooperative going with other local contractors where he's based. He's based up in sort of Yorkshire, somewhere like that. And they kind of sort of share materials sometimes. If someone's got a bit of advanced stock, they might lend it to another contractor. So again, maybe if you can kind of chat to mates or friends you make through the FMB, that might be a useful thing. The kind of last thing I want to talk about really is in terms of what the FMB are doing. I do a lot with the FMB, and it's helped me understand how good a resource it really is. And I think so many members only think the FMB is, I'll pay my fee and I'll get a few job leads. There's far more to it than that. Last year during the pandemic, all the guidance that was out there, but particularly now with the contract stuff, with other guidance, sort of keep checking into the website, keep still looking to see what they're offering. The FMB are lobbying government and sort of people in key areas about trying to get changes to the contracts, to the JCT suite and so on. So there's lots of stuff going on behind the scenes that they're really good with. So just to add that last bit. So I think that's me done now. Hopefully I haven't kind of bored everybody, and happy to take any questions.
Thanks, Gary. That's brilliant. If nothing else from today's webinar, members will know that they're not alone in dealing with these issues and that everybody's experiencing the same kinds of thing. And as you were saying, there are some things that people can do to help themselves and help each other. So that's really good to know. We have had a few questions coming in. It'd be good if members of the panel can come back onto the screen, turn their cameras back on, and then I'll start firing questions at you on behalf of the members. So we've had a couple of questions about the causes for all of this. So how much do our panel think that the shortages of materials are due to the pandemic, and how much is due to Brexit, and how much is due to other issues? That's quite hard to say, but I know you do hear people from time to time saying, it's all to do with Brexit, or it's all to do with the whatever. But it seems to me from what all of you have said so far in the webinar, there are many and various and complex causes for all of this. Can anybody comment on perhaps how much of a cause Brexit has been in all of this?
I'll have a go.
Thank you.
Well, I think fundamentally it's demand. It's demand that's driving it. And there are a few Brexit issues, particularly around driver shortages. But the majority of the driver shortage, I think, was down to a lack of drivers being approved by the government. So there's a mixed story there. Some of it is Brexit. I think it would be naive to say that nothing, that you could just say, well, it's not Brexit related. But the reality is most of our issues are, most of our materials either coming from UK supply or Far East. So most of it is not actually Brexit related.
Okay. And what about panic buying? Is that an issue, or stockpiling even?
Well, I think that really depends on the sector. So the guys from Marshalls touched on it earlier, that you've got a number of sectors that are pretty used to fluctuating demands. And they very quickly, when they see pickups in demand, they put controls on the merchants buying. So they'll either stop them buying, or they'll wipe down orders, or they'll put allocations in, or a combination of all of those. So in certain sectors, they've got a real handle on it. The problem that other sectors have had, they're so used to being able to fulfill from stock and fulfill very quickly, they actually don't have the systems in place. And in those areas, then there is certainly a risk of some panic buying going on, because people are banging in orders quickly to try and grab hold of stock. So there's an element of that. But if you actually look at the volume out and the volume in to most of our merchants, it's pretty similar. So yes, there will be examples out there people early on might have been trying to grab timber, for example, because they knew it was going up. But the reality is that very quickly it went, and they had to go and buy stuff. So, I think it'd be naive to say there aren't people out there who've got some stock. That would be naive. But certainly in a lot of the heavy side areas, the suppliers have a pretty good handle on it quite quickly.
Okay.
Everyone by any means.
Yeah. Okay.
I would agree with that, Nick. I think it's probably naive to think that a couple of people aren't doing it, but generally what we're seeing is the demand is genuine. The sales out data that we can get access to, we're seeing it flow through. So I don't think it's a case of people are just stockpiling. I think the demand is genuinely there.
Okay. We've got a question here that really is aimed at Sarah, I think, which is about a question from Sean. He's asking, would you recommend the price plus method where clients only pay what we pay plus an agreed margin? And can the FMB contracts support that? Do you have anything on that?
It's certainly one of the options. The difficulty is that a lot of clients, particularly domestic clients, won't like it because they can't then predict how much they need to get in terms of money. Most of them aren't rolling in cash. They need to get that by way of loan or borrowing of some sort. And that would make them quite twitchy, I would say. Probably your commercial clients would better understand it. The way the FMB contracts are set up, the payment mechanism would be okay. You'd need to play with the schedule of payments and write something over the top of that provided some sort of regularity of payment and how you would be calculating that. But you'll also need to sort of add in your overheads and profit margin to make sure. And sometimes you might not want to disclose that to clients, whether it's very high or very low. Some clients will challenge that if they've got it. So there's kind of a number of decisions that need to go into that to decide whether or not that's a sensible way to go forward. It could be that for particular items, we've talked about provisional sums or prime cost sums or contingencies. It might be that for particular products, you have that approach, but for the rest of it, you can create a much more, a better estimate as a sort of vague lump sum or that kind of approach.
Okay, thanks, Sarah. Yeah, and as Gary mentioned earlier, we are seeing an increasing number of dispute cases coming into the FMB Dispute Resolution Service where this has been a factor. And we can only reiterate the advice that several speakers have given, which is to communicate early and communicate often about these issues so that consumers aren't taken by surprise by a price rise further down the line. We did have another question from Colin. So Colin is asking about the cost rise and supply issues being about demand of products and how can small builders compete with the much bigger purchasing power of the larger contractors, so national main contractors, housing firms, etc., to gain their share of the materials. And I guess that's covered by some of the tips you've already given, but is there anything else that any of the panel can say about how SMEs can get their share of materials and avoid the large contractors cornering the market?
I think we're picking up Nick's point on ordering earlier. Certainly if I look at our order book, we aren't preferencing one customer over another. So what we're trying to do is if people get their orders in, we'll try and service those orders in sequence. So for me, it comes back to planning and organising and trying to get those orders in early.
So if anybody's got any other questions, need to get them into that Q&A box pretty quickly before we wrap things up, because we have now been going for an hour. So well done to the audience members who've stayed with us all the way through this presentation. And there's been a lot of useful information there. I certainly, for one, feel like I understand the cause of this perfect storm, or the causes, because there's multiple causes, a little bit more than I did before. And, I think we're doing everything we can to try and support our members to manage with these issues that they're having to face just now. And as a couple of speakers have said, please visit the FMB website. We're continually updating the information on there. There's a couple of template letters that might be useful for you to send to your clients that explain these challenges and may be helpful in dealing with it. We will send out a follow-up email after the webinar, which will have some follow-up contact details, links to the website, etc. But for now, I'll wrap things up. There don't appear to be any more questions coming in, and so we'll leave it there for today. I'd like to thank all of our speakers very much for their input today. It's been really interesting and hopefully useful for the members attending, and the recording of this webinar will be posted on the FNB website for members to view over the coming months. But we might have to update it in a few months' time because it's such a fast changing situation, isn't it? So thanks again, everybody, for attending, and thanks to our speakers as well. Thank you. Goodbye.